Forex chart patterns are a lot like online dating. When we see them for the first time, they look great. We get really excited. We want to know more. But then when we actually start to use them and trade with them, the results just really aren't quite what we thought they were going to be. We've all been there. Chart patterns, y'all. Time to talk about them. They are part of the Dirty Dozen, and I think actually this video I'm not going to go to my actual charts because it's going to be a lot of me drawing these patterns out and putting lines on them. It just takes up a lot of time. I think it's better served actually on the blog. So if you're watching this on the Thursday it comes out, give me like a day or two, and I'll have all the visuals up there on the blog for you to see. But I think it would just make more sense if we just kind of go over them on a more general sense, because in this video, we're going to talk about why you probably either liked chart patterns in the past or still like them now. They certainly do have an appeal. They just don't get results for most people because it really is probably more than anything one of the worst hindsight tools out there. It's so easy to see the instances where they worked, but it's really hard to actually see the instances where they didn't work. And those instances are all over the place. We're just not conditioned to see them. And even if we can, sometimes we just don't want to see them. But it's a shame because in the end, they just don't work that well for most traders. And I'm going to try to prove it as best I can in this video, but I'm also going to give some love to my competition. Somebody in this space made a really good video about chart patterns, and I can't actually legally put their video here, but I'm going to link you to it towards the end. Really did an awesome case study about when you really drill down and run the numbers on these things and test them out, they just don't work enough. And if they don't work often enough, they're just not worth your time. So for those traders who are fairly new, let's give some examples of what these chart patterns are. I don't mean Japanese candlestick patterns like dojis and morning stars, things like that. Chart patterns are kind of in their own class. So you've seen most of these before. Some of them are pretty common. Some of them are a little more obscure. But either way, they all fall into the chart patterns category. And most of you learned about just about every one of these at some point in time. And when you did, it really struck a chord with you. It was easy to see, which for those of us that didn't know how to read charts before, seemed really, really daunting. And then we actually see these different patterns and shapes, and we got really excited because we're used to patterns and shapes. We learned them at a very young age. And so where once chart reading was very confusing, now all of a sudden we have something we can really relate to. And as is the case in almost every piece of Forex education out there, every single example they showed you worked out amazing. So these things really resonated with us, and we couldn't wait to go try them. But it's really a shame. I think these places did us a great disservice because these tools are some of the biggest hindsight tools you are ever going to find. But so many of us just can't seem to get away from them. Now, why is that? Well, we really want to believe these things work. I mean, we got so excited about them at first. It's going to take a lot to get us turned off of these things because we're just so bought in from the start. But we only, like I said before, we only see examples where they work amazing, and so we get super excited. We think of all the pips we're going to rake in every time we see a triangle form. But all those times where they didn't work, we never see them because nobody shows us that. It's not in people's best interest to do that. Forex education is meant to get us excited. Forex Twitter is there to say, hey, see, look, I called that falling wedge. Price broke out to the upside just like I said it would. Very rarely are they going to come out and say, oh, you know that head and shoulders pattern that I said was forming? Yeah, it totally failed. Sorry. Because then they lose credibility. So all of the imagery that you see when it comes to chart patterns are chart patterns working fantastically. And unlike things like stochastics and moving average crossovers and things like that, you can actually go back and pretty easily see where those things failed. But it's really hard to see when chart patterns fail. So what invariably happens? You use them, you're not getting the results you thought you were going to get, but you just keep at it. You figure it's just got to be you, because these things work so awesome, because every example I've ever seen is an example of them working really well. And you just get stuck on this horrible merry-go-round. Does it sound familiar to you at all? It's totally okay if this happened to you. It happens to most traders, probably at some point. But the main purpose here is if it's still happening to you, to make sure it stops happening to you. So let's break down why these things just don't work really well. First off, just remember, above anything, we try to be not like the 99% because the 99% loses. They never get to where they want to be, and most of them really like chart patterns. If they see a flag or a triangle form, they're probably going to at least take notice of it and adjust their trading accordingly. The best advice I can give to anybody is to try to not even pretend like they exist, as hard as it is, because they just don't have any long-term value. And on top of that, do you guys remember the trend lines video? In the video, and especially in that blog, I showed you how if you are sitting right next to me and we are both trading with trend lines on the exact same chart, my entry points are probably going to be different than yours because I probably draw trend lines different than you do. And the reason is because there's no one universal way to draw them. If I just want to connect the absolute highs and lows, okay, that's one way to do it. You might say, well, the highs and lows are a lot of noise. I'm just going to connect them on the tops and bottoms of the bodies, where things actually open and close. That's totally fine too, but your trend line is going to look different, and your entry points and your breakout points are going to be different too. So if we are drawing our trend lines different, you can be pretty sure we're going to be drawing our triangles different as well, because that's two trend lines that we're relying on now. And so there's just very little consistency across the board, and when there's not, it's really hard to measure. So even though the 99% of losing Forex traders think these things are great, and these patterns can look completely different depending on who's drawing them, there's one thing you can count on no matter what. Forex Twitter and websites are always going to show you when it works and never show you when they don't. When you combine these three things, you have a real problem on your hands. And let's not forget what moves price up and down anyway. It's not these fun little shapes. It's the big banks. You guys know this. And the big banks react to what retail traders do. And retail traders don't operate in triangles and flags and head and shoulders patterns. Those patterns are going to come up over time anyway. If you allow enough candles to go by over time, these patterns are naturally going to form every once in a while. It doesn't mean that price is about to go long or price is about to go short. They're pretty meaningless, which means at any point in time, price has a 50-50 chance of going one way or another. So I know some of you guys try to overthink this and be like, well, if they work so bad, we'll just take the opposite side. Well, unfortunately, you can't do that either. If we had something that lost that often, that would be great, but these things just always seem to hit right about 50-50. And given the fact that they do, you might as well just sit there and flip coins and go one way or another. But we always try to do better than that. We aim to put systems together of combinations of indicators that give us a much higher win probability in the long term. And we cannot do that if we're paying attention to things like chart patterns. The sooner we completely move away from them, the better off we are. Now, I can already see this coming. Every time I do one of these videos on one of the tools in the Dirty Dozen, I always get this ridiculous pushback from that guy who's all like, oh, VP, you just didn't talk about the super complicated, convoluted way that I trade chart patterns. Therefore, you are doing your listeners. Shut the fuck up, dude. I get this all the time. Look, there's 1,000 ways to trade everything, okay? I'm not going to sit there and talk about all 1,000 of those ways. The video would take 25 days and nobody would watch it. If you have cracked the code on chart patterns and they are working wonderfully for you, great. Keep using them. Make a ton of money. What are you doing here? For every other trader not named you, they're probably a bad move. All right, here's what I propose instead. Put together a system like we're doing that's proven to work consistently over time. Don't deal with these 50-50 chart patterns that most people don't even draw the right way. I mean, doesn't that sound like a better idea? Doesn't that sound like something you would rather do? Because you have proven your system, and things like chart patterns have not been proven to work. I've seen books on these written about chart patterns when it comes to stock trading, but that's a completely different market than what we trade. There is really nothing convincing out there that is showing you that chart patterns are a really great tool to use. But there is something really great out there that shows you that these are not the greatest tools to use. And I got to give some props to my competition. You guys might be subscribed to this guy already too. It's the Duomo Initiative. And this guy referenced someplace somewhere that did a ton of research into these things and just tested them over and over, and they really couldn't find any evidence of them working well. I'm going to link this video down below in the description, and I'll also take you right to the place to where he's actually talking about this study. Now look, I normally do disagree with much of what they put on this channel, but that's fine because I disagree with pretty much everybody else's Forex channel that's not mine. That's why I created this channel. But this little study he referenced was really awesome, and it proves what I've been saying. I'm just one guy with one opinion when it comes down to it, traders. But having a secondary piece of evidence here is really, really key because it just goes to prove that the sooner you get away from these things, the better. And trying to stick up for tools like this or just trying to keep getting better at them is just going to be a waste of time. So I'm going to link that below. Check it out for sure. It's not very long, and they have great production value over there. They put some really pretty, well-produced videos together. I mean, you can tell they have like teams of people like really putting in the work, making everything look and sound great, to where I'm pretty much over here farting into a garbage can by comparison. But in the end, it's the information you want. And in conclusion, what I recommend you do is just don't pay attention to chart patterns. If you've learned anything from this video, get off of it. It's not easy, I understand, but do your best. You're going to be better off. And just don't, especially when you're like in a trade yourself and you see one approaching or forming, don't let it alter the way you trade. We are conditioned to want to do this because we fell in love with these things so much from the start. At any point in your trade, just do your best to completely block them out and ignore them. And just remember, if you have a good system, it doesn't matter what else comes about. You could be trading right into a bearish flag. And if your system goes long, your system has been proven to do pretty darn well if you've done it right, to where chart patterns have not. Putting together a great system of indicators that has been proven to work over time is far superior to any of these junk-ass tools. And if you agree and you want to put a great system together too, well then this is the channel for you because it's the only channel talking about it and actually showing you how to put these systems together. So if you're brand new and you like the way I explain things and you'd like to trade our way, come on aboard. Hit subscribe and hit the bell. Don't miss anything. I'll put the beginner's video on the end screen so you can kind of get started the right way if you want. But videos like this are really vital because we have to shake that last little bit of nonsense completely out of our heads when it comes to these tools that were allowed to reside there in the past. But check out the blog too in a couple days. I'm going to do my best to put as many good examples up there as I can. And keep firing away at those systems. Traders, we still have a ways to go here. Little by little, we're going to get you closer and closer, but our work is never officially done. So keep plugging away. Make it magic. Go get it.